Hello everyone, today is Friday, June 26th, 2020. My name is Evan and welcome back to another market recap video. For those of you who are tuning in for the first time, we break up this video into two parts. The first part right here, we're going to talk about what went on in the markets. We're going to look at things like market internals and individual sectors, volatility and credit markets, really just pick things apart and find out some of the standout movement that we saw over the past week. And then in the second part, we're going to jump into the charts. We're going to put things into context. We're going to look at some trends and how this recent action sort of fits into the bigger picture. So hopefully that sounds good. Let's jump right into it here. We had a busy week and a couple of the headlines standouts from the week. We did see, unfortunately, coronavirus cases on the rise, leading to companies and individual storefronts kind of shutting things down again or slowing the reopening. So we had lots of headlines and markets sort of dealing with that uncertainty and unfortunate news. The VIX comfortably around 35. We had some interesting behavior in the VIX, which we're going to talk about in a little bit. And tech stocks really kind of barely budging to the downside. We saw a pretty good decline across the market broadly, mostly came at the end of the week. But tech stocks, again, as a whole, there are some individual names that are feeling some pressure, but generally speaking, tech is doing pretty well and continues to do well. It's not really a new story. So if we look at equity market performance this week, we're looking at the right-hand column here. You can see basically we had down action across the board. S&P 500 down almost 3%, NASDAQ 1.5%, Russell 2000 over 2%. And this is interesting because this is starting to be a trend here where we're getting some outperformance out of the international markets. We'll see, if this continues to be meaningful and persists, but we've seen this more and more in recent videos that the world, everything outside of the US is doing not so badly. Now, if we kick things over to market internals for the week, it was a pretty mixed story. In terms of number of stocks hitting 52-week highs and lows, still positive. We're still seeing more stocks making new 52-week highs than the other way around. Those numbers are getting a little bit shallow. So notice in Wednesday, Thursday, even Friday here. And remember, Friday is an estimated number because I do record this video before I get the final numbers, so expect this to be revised. But the bottom line is you can see drying up a little bit here on some of the upside stocks hitting new 52-week highs, so something we'll want to pay attention to. If we look at the cumulative AD line, you can see that was on aggregate negative here for the week. That means there were net decliners on a whole throughout the week. If we look at this last row here, percentage of stocks over a 20 SMA, you can see it's a pretty low number. It's one of the lowest we've seen now in quite some time. So 11%, this kind of gets you into bounce territory. So again, if you're a shorter term trader or if you're just a contrarian in nature, you're looking to put on that that quick bounce or that scalp to the upside, at 11% or so, it can obviously stay down here depressed at these levels for some time, but you're getting into the range where in the very, very short term, you could expect some bounces. Now, if we look at sector performance here, on the week, and we're looking at this right-hand column. This is the weekly performance sorted from strongest to weakest. The strongest here is technology, so you can see tech at just down slightly, minus 0.42%, followed by materials and discretionary. So kind of an interesting mix there to round out the top three. On the downside, we had energy, we had communication services, and financials down around 5 to 6%. So you can see getting a pretty good divide here in what's working, or at least what's not getting sold off so hard, and then obviously the things that are getting sold off pretty aggressively. If we kick things over to volatility and the volatility term structure here, I think this is actually quite an interesting week to pay attention to because if we look here at the VIX and we're looking at the term structure here, so basically, big fancy term, but essentially, we're just looking at what the VIX is priced at various durations. So the VIX is what commonly is cited and looked at by all of us or market technicians, which basically measures the front month. And then we're just looking at the 3-month VIX, the 6-month VIX, and the 1-year VIX effectively. And the blue line is this week's VIX term structure. Orange line is last week's VIX term structure. And what's interesting to note is, of course, the action that we saw this week, right? We saw 2 to 3% declines in the equity market, but we actually didn't see the VIX rise at all. In fact, the only thing that happened was that the VIX came down here. Granted, it was further out in the curve, but volatility didn't catch more of a bid. It didn't accelerate. There wasn't sort of rampant fear or more protection being bought, despite the fact that stocks fell and closed the week out near their lows. So I think that's an interesting observation here. I think you might be able to glean a little bit of hope from it. Again, if you're looking at that contrarian signal, it by no means suggests that the VIX can't, suddenly jump 30% on Monday. Of course, that can happen, but I think, looking at this week's action, looking at VIX, you'd expect it to potentially be a little bit higher. Now, of course, this gets into a much more complex, nuanced conversation that a 35 VIX is extremely high, and if we are only seeing, I know it sounds crazy to think that only seeing 3% declines over a week's period, that actually probably makes sense in terms of how the math shakes out for a 30 VIX. So there's, a debate to be had here, but certainly I think it's an interesting observation and not one, the majority would expect after a decline like we saw this week. Now, if we look at credit markets, nothing good here. The JNK rolled over pretty hard, which is our high yield. So this is basically the kind of the highest risk companies here, or I guess basically everything that's not A rated, fell 2%, which is a big move for JNK, that ETF, and that actually in fact pushed it back over to bearish trend. When we look at the second half of this video, we can see that. Investment grade did fare better this week, and it's generally what you'd expect. I mean, it's generally the investment grade corporate bonds are going to be a little bit lower beta than JNK, but regardless, I think either way you slice this, nothing good to necessarily report here from credit land. Now, if we finally kind of wrap things up with interest rates and commodities, we saw yields fall a little bit this week. We saw gold and silver continue to rise, and we saw crude oil, kind of hang in there. It was down 3%, but quite honestly, not horrible given kind of some of the developments that we saw throughout this week. Now, if we kind of think, and sum all of this up as a whole, we got one green check mark there, and it's an interesting one. It's risk sectors outperforming, and it just marginally happened. And this is, sort of a internal weighting that we've created here to measure this. But I think it's, again, interesting to note. I'd also throw the whole volatility environment. It's in the penalty box this week because of just where VIX is right now. The nature of volatility is extremely high. So it is getting an X there. But I do think, again, like we talked about in that earlier slide, there's some marginal there's some marginal potential pro for that near-term volatility. So if we sum it all up here, report card for the week is a D. There really wasn't much to like this week. Pretty much across the board there, we saw some negative behavior. Now, I included our Merlin allocation in last week's video, got some comments on it, got people that are interested in just seeing it on a routine basis. We'll try and incorporate it as much as possible. Won't promise to always have it in here every week, but you can see basically this is so Merlin, to take a back step again, if your first time here, this is the trading strategy that we follow. You can see that its allocation did increase over this week. So I think we had 80% cash last week, and you can see it's down to about 68%. So it's still, I guess you could argue, fairly defensive right here. But we did do some buying this week and potentially have some more buying on deck for Monday. You can see pretty healthcare dominated at this point, and fairly defensive areas of the market. Still have plenty of cash at, to put to work. So quite frankly, I would welcome a little bit more of a pullback just to get some more exposure to stocks. But we'll see if that happens. If you are interested in learning more about the strategy, we'll link it up top. There's the link down there. 14-day free trials are available. So that is it. Let's jump into part 2 now. Let's jump into the charts and put all this into some context. All right, here we go. We're back with part 2. We've got TC2000 open. We have our smart trend filters applied to our charts. Those are the green, yellow, and red lines. If you're not sure what the smart trend filters are, we'll send up a link in the top right now. Prices are the white dashed line, and we're looking at our equity market grid with a weekly time frame. So if we start in the top left here, we look at the S&P 500, basically we can see, the S&P 500 was down almost 3% this week. However, we are still in a bullish trend environment on the long-term time frame. Now, like we talked about in our past few videos, notice the slope and angle of these dotted lines here of our smart trend filter. They are very sideways, gradual, in fact, even inched down a little bit this week. So what that speaks to is basically a very weak trend here on this time frame, but it is an uptrend, and we do want to respect that. We've been in an uptrend here for the past 5 weeks. It's been effectively has paid to stay on the bull side over that duration, but you can see we're of course coming back down and pulling back to test this. So it'll be interesting to see if this begins to get into jeopardy here in the coming weeks. If we look in the top right here, this is the NASDAQ 100. You can see lots, a much different picture here where the slope is much more steep to the upside and rising. That speaks to, again, we talked about technology being very resilient at the top of this video, and you're seeing that here with the NDX. Bottom left is the Russell 2000. You can see, again, similar to the S&P 500, very gradual here, pulling back to its trend filter, but still bullish. And then in the bottom right, we have ACWX international markets. Again, very marginal pullback this week and still bullish trend here on the weekly chart. Now, again, I always like to, I know I unfortunately sound like a broken record for the majority of you who tune in every week, but, time frame obviously matters here. So when we speak of trends, like we're looking at right now, this is for a 2 to 3 month plus outlook. If that's not your time frame, then this is maybe fairly irrelevant to you. If you're trying to trade on a day-to-day basis or week-to-week basis, this just might be too long of a view for you. So again, keep the time frames in mind. And with that said, if we go down to the daily chart, we actually do have some interesting behavior here unfolding after this week. So if we look at the S&P 500 top left chart, again, with our trend filters, notice we've got a transition now to a bearish state. This is the first time since April that you've seen this trend filter turn negative, turn red. It's been approximately 58 bars, 58 trading days. So almost 3 months since you've gotten a sell signal here on the daily chart. And that's something I think we should take notice of and pay attention to, because that certainly, at least historically, right? And when we look back at prior prices of when things go into bearish trend, that doesn't tend to bode well for the market. It doesn't have to turn into a big elaborate downtrend like we saw in March or February. It could just mean a week or so of rocky trading before stabilizing. It's hard to say, of course. It's not a magic ball, crystal, whatever analogy you want to put to it. It's just looking at price and volume and using some simple math to determine who's got the dominant direction right now. So for the S&P 500, that turned to a sell signal on Friday. If we look up here at the NASDAQ, you can see we're not seeing that behavior yet. We're still seeing very resilient behavior. We've seen nothing but green and yellow dots on this way up. So for the NASDAQ, the benefit of the doubt is still in the bullish camp. And, in this type of environment, this is usually where we kind of say dips can be bought or dips should be bought in this type of uptrend. That can change, right? The NASDAQ could get a big follow through selling day on Monday, and maybe this starts to roll over. And there we have, kind of the unfolding of a more widespread market sell-off. That, again, isn't a prediction, just a potential scenario. For now, NASDAQ is bullish. The IWM in the bottom left, you can see actually turned down on Thursday. And I think what's interesting about this, this turn down, and I'm sort of going to talk up the indicator a little bit, the smart trend filter, is that notice that we got the red print here on Thursday, and notice on Thursday that the IWM was actually up 1.5%. So even though prices rallied on Thursday, we actually, we're still able to detect that the sellers had the upper hand here, and that obviously gives you a good lower risk entry point if you can sort of get get a nice rally into a bearish trend is certainly something where it's generally advantageous to take that short trade. And you can see we rolled over and closed near the lows here on Friday. So the IWM bearish trend now for 2 days, and again, for last time we saw that was back in April. ACWX, bottom right, you can see still green and yellow here, currently yellow, transitioning, so nothing new and still fairly innocent, kind of like the NDX right now. Pretty much don't have the evidence right now to tip to the bearish side as of right now. The Russell is the weakest, followed by the S&P 500. So if we look at some of the individual price action now of the S&P 500, a few of the things that we were talking about. So if we switch over to this view here, which has been our price action roadmap, if you will, if you recall where this sort of all started, the turbulence all started was back in this area here. So this was our excitement into the middle of June, and I think I heard my Siri go off. So I think Siri might be listening to me right now. Let's see. Maybe not. So June here was where we got that excitement. We had this gap up, and then we got the gap down, creating an island top. And this island top, certainly now in hindsight, has continued to keep its grips on the market. We have not been able to get back up here, fill this open gap and sort of save the trapped longs that purchased on those 4 days. Because what you'll notice is we had this very aggressive selling day here on the 11th. We did rebound. We bounced right back up into the gap, and then you can see took attempt 1, attempt 2, attempt 3, and then we started to sell off here late into the week, or the second half of this week, and closed back towards these lows. So for the S&P 500, the range that we were talking about most immediately was this 3140 to about 3130. As resistance, as an area to pay attention to, and we ended up getting swiftly rejected from that. Didn't really know after the fact until Wednesday, where we got the confirmation follow-through day lower. Thursday led to a bounce higher, and then Friday a nice rug pull. So basically, when we look at this price action here over the past 2 weeks, it's been very choppy, and it's been basically dancing and kind of mixing traders up. If you're switching from positive signals to negative signals every other day, and really kind of just causing lots of confusion in here. And you could argue that from a technical perspective, really not a whole lot still has changed, because we haven't really broken what I would consider a more significant pivot to the downside, which would be this 3,000 area, or this 2990 area, which is where we saw the big turnaround back on the 15th. So to me, from a price action perspective, this is still the lower band that the market really needs to break down through to really accelerate to the downside, or to really open up much more risk to the downside. If we simply just come back down to this sub 3,000 level, and we hold, that, you know, could prove to be an excellent buying opportunity, right? We don't know at this point, and we're not here to make predictions, but we're here to just keep an open mind about potential scenarios. The bottom line is, if we come back down in here, we find support. If we put in another day like this on the 15th, or maybe we undercut the 15th a little bit and get closer to the 29.40, but ultimately if buyers step in there and kind of pop us back up, then we've simply just got you know, the longer term uptrend still at our back, and you know, 2 months worth of more or less sideways consolidation, which could, you know, set us up for a bigger move, you know, later in the summertime. So that's sort of the way we can kind of frame out some of the actual immediate price action levels. 29.90, just under 3,000, essentially the lows or the opening price from the 15th. That's effectively what I'd be looking at, all the way down to 29.40 is the bottom end of the range. All of this trading in here from, call it 3,000 to 3,100, is all just going to be chop and noise. So careful not to you know, get too mixed up in there or just trade too often, because it's going to be a you know, a headache in this area, I'd imagine. So let's keep that in mind. Over 31.40, that's the bogey now to the upside. You get a break over that to actually get some momentum. So until and if that happens, you know, I think this market is just at least in store, you know, at minimum for more chop, at worst for, you know, a more serious potential rollover. If we look at the IWM, we switch over to this board here. Again, you can see it's just been very orderly here over the past 10 trading sessions. I mean, look at this, you know, look at this nice little you know, this nice little channel that we've been just kind of slowly inching lower in. You know, it's been very orderly. Volume's been mostly lighter on this consolidation. So again, you're pretty much just in this very choppy zone, and 133.50 is basically the low end of that range, which is what we talked about, like we talked about as support for the S&P 500. I'd be paying attention to the 133.50 zone in the Russell 2000. It has been one of the weaker markets. It is off, you know, off of the highs that it made 3 weeks ago. It's down 12%, so, or 11.5%. So, you know, it's had a meaningful pullback off of those highs. But now let's see if, you know, we can actually break down through 133.50, or if we simply find some support there, then again, you might have good buying opportunities back into this zone. NASDAQ 100 here, again, just looks, you know, kind of nothing like the other markets that we just looked at. We're trading at all-time, or just off of all-time highs. We effectively, you know, set a new all-time high on Tuesday of this week, and you can see we are now down 3% off of that high. So, you know, very strong behavior. We're still seeing that exhibited. I mean, we do have a short-term, you know, kind of failed breakout, whereas you know, you basically had this all-time high that got set back here on the 10th of June. We pulled back. We rallied back into it. We chopped around. We had the new marginal high close on Tuesday, and now we're back below this 246 area. So you do have the makings of a short-term kind of failed breakout to the upside, and that can lead to some, you know, to more meaningful pullbacks. So let's not rule it out. Let's keep that open mind. But for now, out of all the indices here, the NASDAQ still performing the strongest. So if we now get into some other markets here, we go to our credit screen. You can see investment grade credit still nice and positive. Junk neutral, TLT neutral, but trying to turn back up. VIX is still neutral as well. If we go down to the daily chart on some of these things, you can see a slightly different story. Investment corporate grade credit bonds here still in a positive uptrend. The JNK, though, we talked about this selling off hard this week, and take a look here. We've got a bearish rollover in high yield. So this again kind of coincides with some of the weakness we saw in equity markets. This here staying negative is, you know, of course, just kind of confirming and you know, holding to the fact that things got a little rougher this week, and looking like we you know, can continue to sell off. VIX down here in the bottom left, notice we haven't moved back up into the buy signal. So we had this buy signal that was generated back here with our trend filter back on the 12th. It had a few days of it, but then it kind of just fell back down into this more choppy zone. So, the jury's still sort of out here. We do, again, need to see if the VIX can sustain a move over 35 and continue to ratchet higher. For now, we get a potential higher low, and we'll keep an eye on that next week. TLT went positive. If we go to commodities next, commodities here with gold still bullish, silver still bullish, USO still bearish, DBC still transitioning. No changes here on the weekly chart. If we go down to the daily chart on some of these, gold went bullish here, had a nice breakout on Monday of this week. Silver still trying to make up its mind. It's mostly still consolidating, but still within the context of that uptrend. Oil here, again, weakening in the near term. It's been in a sort of buy signal here since the 15th for USO, and that is transitioning right now. DBC or commodities here also transitioning now. Looks like it might even transition lower. Next week, we'll see if that actually happens. Last but not least, on our sector grid, you can see there were lots of changes this week here, and I do want to spend some time looking at some of the individual price action of this, but the daily chart on our sectors, lots of these went bearish this week. Energy, financials, industrials, real estate, utilities, they all went bearish trend on Tuesday of this week. So you see energy here, you see financials there, you see XLI, industrials, XLB was a little bit later, XLRE, which is real estate. So we have lots of transitions down here in the individual sector level. Basically, the things that are still holding up is technology, XLK. You can still see neutral there. And bottom left, biotech, IBB, just went neutral here on Friday, but has basically been green. Those are still the hideouts and pillars of strength. Technology, biotech, and that of course speaks to exactly what really the NASDAQ is composed of. Now, if we go into some of the individual real quickly on some of those sector ETFs, again, this is XLE. This went bearish trend for us on Tuesday. So right in here was the sell signal. You can see that has continued to move lower. Now we are coming back into a congestion area. So again, kind of like we talked about with the market, if all we get here is a move to the kind of the lower end of these ranges and we hold support, then we can suddenly have a good thrust up in the market if none of these bear trends actually manifest themselves. If we just come back down into support and hold, then we suddenly have a very different story. XLF here starting to break support. So ideally we would have wanted to see this hold around 23. You can see this selling off here with an ugly candle on Friday. So again, that's in a tough shape. XLI here kind of coming back down into this old breakout area. We went bearish trend, got bearish trend on this signal on Tuesday, continued to sell off. XLRE, again, kind of coming back into this prior congestion area. We'll need to see if this can hold at all or if it is going to sell off. XLU, same thing, went bearish trend, but as we can see, coming back down into this prior support. Notice also that this is down 8 out of the last 9 days. So this is where, you need to, start to add a couple more elements, because even though this went bearish trend, it's down 8 of 9 days and coming into support here. So frankly, I mean, personally myself, I wouldn't necessarily want to be shorting this here. In fact, it looks like a more interesting, kind of a short-term, buy signal than anything. But the trend here did break to the downside, so we'll see how this acts. But those are sort of a taste of some of the sectors that went bearish trend this week and are continuing to sell off. IBB, again, this is where we've got our pillar of strength. So you can see this broke out to new highs early in the week, pulled back to the top end of this range, kind of this breakout retest, if you will. So it'll be interesting to see if biotech can hold up. XLK also, again, trying to break out earlier in the week and then pulling back and moving sideways. So, you could pay attention to those two. If those start to break down, if those can't hold themselves up, then, then maybe the market's in more broad trouble, given the fact that they're, really doing the heavy lifting to the upside. So that's it. I think those are all of my notes for this week. Lots of things going on. Again, it's going to be time frame, dependent on your outlook on the market, but I think generally speaking here, we did get a good amount of increasingly bearish action this week. Again, we'll see if we get that follow through. We'll see how some of these prior support zones act heading into next week. So that is it. That is all I've got for you. Hopefully this was helpful. You can tune in every Friday. We do long form market recap videos just like this. You can subscribe on our YouTube channel or follow us at the Trade Risk, traderisk.com. And we'll see you next Tuesday for the midweek update. Have a great weekend, and we'll see you in the next video.